All right. Well, welcome everybody. Welcome to another Monday, March 8th, 2021. Glad to have everyone here hanging out with me in my live stream. Again, you guys all know my YouTube channel, or else you wouldn't be here. So, again, glad to have everybody here. Today, we are going to discuss all kinds of stuff. I want to talk about. Wow, what am I going to get into today? Well, I want to do the overall markets. We're going to do kind of a little segment on what's moving the markets, what started moving the markets last night, this morning, etc. I want to talk about Swaggy Stocks. So I don't know if you had a chance to take a look at what Chris and I were talking about last week, but we were talking about a website called Swaggy Stocks. I'm going to bring that up as well, and we will go through and we'll look at what's swagging. And what's swagging is there's going to be some really good stuff, guys, that are coming up here. Some great opportunities. I'll discuss that as well. Tesla, Peloton, GameStop. We want to talk about those. Hey, is the pullback over? All right, we talked 2 weeks ago. We talked about the pullback coming in for a few weeks, and we may have got the Biden bump. Might be the catalyst to move things higher. We'll get into that as well. Lots of stuff I want to get into here. I need to move the needle here real quick first, and the needle means let me get to the disclaimer screen. You can read this in its entirety. I'm not going to leave it up that long, but just check out the video when we're finished. We'll get that over to you guys as soon as the live cast is over. But two quick things I want to mention. Number one, stock and options trading has large potential rewards, but also large potential risk. Number two, I am not an investment advisor, all right? I'm here to show you how I spot opportunities, create alternative risk trades, and plan, execute, and manage those trades. But whatever you decide to do, obviously is between you, yourself, your spouse, significant other, and your investment advisor. So please keep that in mind. Again, my plan today is to go through, we're going to do market news, and I want to do something called channel charting. All right, how many of you in here know what channel charting is? We'll get into channel charting. I think that's kind of a cool thing we're going to talk about. I did say Swaggy Stocks. We'll get into Swaggy Stocks as well. And then I want to get into crypto versus Riot again, because cryptocurrency is back above 51,000 Bitcoin, yet Riot blockchain is not moving along with it. So when does Riot blockchain become positively correlated with Bitcoin again? That's something we want to talk about as well. So thank you all for being here. I see a couple of you folks kind of cluing in with me. Thank you very much. Is it Nadia and Keith? Thank you very much for your comments on the podcast. I love listening to certain podcasts as well, and but typically what I do with podcasts is I use them more on the audio side than the video side. We added the video so that you could see us. I hope you guys like that. If you don't, you know what I usually do is if I'm listening to a podcast and I don't want to see what I'm listening to, I just simply hit this screen right here and then turn it off and just continue to listen. And usually podcasts put me to sleep, so I hope I'm not putting you to sleep with the podcasts that we're doing out there, guys. So I do appreciate the comments. Okay, so let's get right into it here, shall we? And I'll check your comments from time to time here as well as we go through this. Well, let's talk about the news first. So there were a lot of headlines that came across this weekend as well as this morning. These are the ones I thought really helped move the markets for the most part. Number one, I'm calling it the Biden bump. All right, the Biden bump, the DC bump, whatever you want to call it. The $1.9 trillion stimulus package, which passed the Senate, did cause a pop in the markets last night. There was a pullback, and in fact, from about 6 p.m. Sunday, when we got the high Sunday night, then we pulled back, and we're actually negative. Then I woke up this morning. We were back to positive, but barely, kind of moving back and forth. Since then, the markets have moved higher. So I think that stimulus package is going to weigh in on stocks, but I think it's going to weigh in more on commodities and also some alternative assets. Air travel is expected to increase by 40% this summer. So if you haven't traveled and you want to enjoy the middle seat being open, I don't think that's going to be a thing very much longer. In fact, in order for airlines to actually start becoming profitable, those middle seats have to be full. In fact, I was looking, I heard something else that came up that has nothing to do with air travel, but it has everything to do with entertainment. New York City has finally decided they're going to start opening for business again and starting to increase capacities. But they're saying that the theater district's going to open. Let me tell you something that I know about the theater district. They haven't changed the seating in the theater district in decades. I mean, those seats have been the same cramped seats they've been for as long as I can remember. I don't know what kind of retrofit they can do in there other than X out every other seat or every third seat. But the one thing I understand about the theater district is you need every seat to be full to even make money if you're operating that in a theater. And some theaters can be at full capacity and still not make money. So I don't know how or when they're going to turn it around, but at least New York is kind of realizing we've got to get New York open again. It took them a while, but they realized they got to do that. Then there's the great rotation of 2021. And what I'm talking about there, and we've been talking about this for quite some time, folks, and that is the area of what was last year's new tech. We're rotating out of new tech and rotating into, I call it dirty energy. Clean energy is rotating out, dirty energy is rotating in. New tech is rotating out. Old tech like IBM has been rotating in. Swaggy stocks, we want to talk about that. So I bring that up real quick because this is another piece that's kind of a side note to the stimulus package. There is a considerable amount of people that are looking to take some of their stimulus money and put it back into the markets again. Now, I think that's going to create some incredible opportunities for us if we watch this crowd correctly. And I think looking at Swaggy stocks is a great place to start. And if you take a look at GameStop today, GameStop was up today on, on just basically it's news. But I think more importantly, the area, I think a lot of reasons GameStop and some of these stocks are up is because of the idea that more money's coming in. And so these stocks are getting bid up right now as this stimulus money comes in within the next week, gets deposited in the next week. We could be seeing, again, highs. We could be seeing short-term bumps that could turn into longer-term dumps in these particular stocks. So it's important to look at these and see really how much positive sentiment's in, because I believe this itself is becoming a pattern. And I'm a pattern trader. I like patterns. I don't like to see the little guy lose, but I got to tell you, the majority of people that are following the Reddit community are getting their news from folks that are inexperienced. And as much as they want to get the suits, the problem is that you want to move with that big money. You want to be with big money. Big money isn't going to win all the time, but big money is consistently right. And you want to be with consistency if you really want to make this a business and not a hobby and not something you're doing until your job becomes available again. All right, and I'm not talking to most of my group here. We're all old school. We already know these things. But for those of you that are new, those of you that are millennials or Gen Y, you're getting into this business. All right, I'm an old guy. I'm double nickels. 55, but I managed to get through that 87 crash. It hurt me. It stung me bad, but I came back. And what I don't want to have happen is I don't want you to get stung bad here. Some people got stung bad with GME, with AMC. Don't get stung bad again. All right. Learn a more consistent, more probable way of making money in these markets. Bitcoin bounce. That's been, I've said it before here. That's my best long-term buy and hold so far for the last year for sure. So let's go ahead and take a look at the markets. I see the comments that are coming in, guys, and glad to have all of you that are in here, talking up your comments. Realize you're talking to me, you're talking to each other. I will look at these from time to time and see if there's something I can add to as far as what you see happening in the marketplace. Let's jump to the markets. Let's take a look and see what's going on. So I'm going to pop over here to the long-term charts first. And let's take a look first at what's happening in the overall markets. Now, I said I would talk about channel stocks today. So this is a kind of an auto channel piece, if you will, that's right off of our website at tomsoptiontools.com. And for those of you that are brand new, if you're brand new, then if you look at all my videos, have a link below the video in the description for a 2-week free trial. You can free trial everything on here that we have, from the option trader to the contrarian trader, complete trader. This right here is actually in our lowest priced piece. But I just want to make sure that you realize that what we're doing is the computer will pull channels. And it will layer channels, short, intermediate, and long-term channels when it sees them based on the algorithm. Right now, what you're seeing here is you're seeing that short, intermediate, long-term channels revolving around the last 102 days and around the last 33 days. And for the stock market, we see that channel still moving higher, right? It's there. We got a bounce. We got a bounce off just above 370 when you're looking at the actual numbers. And more importantly, we have bounced up to what I like to call the equilibrium. All right, that's the middle channel. So if you see the green area there, you know what? I got to turn something on here that I don't have in the basket. So let me jump to my launch pad real quick. And let me bring up the pinpoint. There we go. Big button. So let's see. Let's see if I can make this thing bigger. There we go. Size it up here. Perfect. Perfect, perfect, perfect. All right, so what I'm looking at is channels here, and I see this is my support channel. That's the lower end. This is my resistance channel. That's the upper end. And the one in the middle is what I like to call the equilibrium, the mean of the channels. Right now, all channels, like for instance, you see the support channels, and we're hitting support. But do you see the resistance channel? We're nowhere near that resistance. This is based on the algorithm looking at where that projected resistance can be. And it's based on, among a lot of things, average true range. And so as you can see here, we do see some resistance up here above the 400 level. Now, we have not gotten to 400 yet, but that resistance of 400 and just above 400 is if we do break the all-time highs, which the all-time highs happened in the middle of February. All right. If you were here 2 weeks ago, we were discussing the money calendar saying we were pulling back for a couple weeks. Well, if the money calendar was right, the money calendar was right for 2 weeks. Now the money calendar is saying potentially the bottom is in as far as patterns. And now we expect to see a little bit of wiggle, but potentially moving higher. And if that's the case, then the bull market's in. We're back to moving higher again. And if you take a look at fundamentals, that makes a lot of sense. And the reason that makes a lot of sense is because all this money that's pouring in is devaluing the U.S. dollar against what? Against stocks, against foreign currencies, against commodities, against cryptocurrency. So we could possibly get an arbitrary bump here just because the U.S. dollar we're getting more U.S. dollars pumped into the system. All right, that's the stock market. Let's take a look and see what's going on with the rest of these. And again, the theme we're looking at today, everyone, is what I like to call channel charting. Okay, channel charting. So channel charting, as you can see here, we're looking at TLT now. And what I've done, for those of you that are using our software, and I don't want to make this isn't a big plug about software. I'm not plugging anything here over the course of our time together, except just simply plug in the markets and looking for opportunities. But for those of you that are home gaming here with our tools, what I'm doing is I'm going into, I have a list called my stock list, but you can go to any symbol and type the symbol in. And what you're doing is coming down here where you see what's called channel test. And I'm basically clicking on channel test and then clicking update. It throws all this in for you. As you can see with bonds, I'm looking at TLT. Now TLT had support at 155, once, twice, and then we blew right through it. Then we started some new support, which became resistance at 150. Well, over the last month, we've dropped down into the 130s. And the bond market, in my opinion, still, I mean, you can see the channels are in a downtrend. I don't think that we're done yet. I think that we do see a pop up. We do see a pop up coming because if you take a look what happened right here. All right. So you see this low that was put in about a week and a half ago, and then the next day we got a massive short covering. That's what I think is going to happen with this market for the considerable future. I believe rates are going to go up. I believe, and the trends, just look at the channels. The channels are telling us that we're channeling down, but we will get days where you're going to see massive short covering come in, and you're going to see these big bangs to the upside. And then I think we drop back off again, right? And the reason I say that is because, again, as the dollar gets cheaper, what happens? All of these assets get more expensive. I mean, take a look at home prices, for instance. Home prices have gone up dramatically. And it's not just in certain pockets of the country. It's with the country as a whole. That's a big thing. Plywood, the cost to build a home has gone up dramatically. New cars, highest prices we've seen in years. It increases because the sheet metal, the parts that go into building a car have gone up, right? You don't have to go any farther to your grocery store, and you see prices in the aisles, around the perimeter, much higher than they've been. So this will eventually go into the CRB index, the Commodity Research Bureau index, and keep pushing it higher. In fact, let me just mention this. I will give you a plug for my next video. My next video that I'm going to be doing, which will be posted tomorrow, right here at Tom's Trading Group, on our YouTube channel, is going to be the top 3 assets, the top 3 alternative assets that are my go-to assets in a falling dollar. These are assets that I have owned. These are assets I've had for a while, and they're also assets that you can trade. Most importantly, you can find that the majority of these even have options on them. So I'm going to actually talk about the physical asset, and I'm going to talk about the tradable asset, and that's going to be in tomorrow's video. Right? I don't have time to do it today, and it doesn't make sense for what we're covering here today. So let's continue. So this is the bond market. So right now, stocks look to be trending higher. Bonds look to be trending lower. I do think that if we get significantly lower in the bond market, then that could trigger a pullback in the stock market. All right, so when do we catch the next potential corrections in the market? We're in March right now. All right, we're now in the second week of March. So if you look at seasonality, we get into April. I think April could be the next pullback, not just because of the pattern saying that we can pull back in April, and really about the second week of April that starts. But what else happens around the second week of April? Happens every year. In fact, it happens around April 15th. It's called tax time. And I think what you're going to see is you're going to see a lot of Americans that are going to get some sticker shock. And the sticker shock is going to come in 2 forms. Number 1, a lot of them don't realize that that stimulus money comes as an income. That's the first thing. And number 2, any of those traders that made money last year, and there were a bunch that did, in Robinhood, in Webull, in all the new account openings, well, I don't know if they realized that if they've been day trading, like the Barstool CEO, Portnoy, they're going to have to pay tax on those profits, and they're going to be taxed at income. And if their income jumped up because they had a good year, then maybe their tax rate jumped up too. So these are some things that folks are going to have to deal with. And they really haven't looked at it yet, but they're starting to look at it now, and they're going to start looking at it around, I think, around next month, the month of April. Okay? All right, Elaine, yes, all streams are at 12 noon, although I'm kind of thinking maybe I'm late to the party, and I'm actually thinking I might do this earlier. It's just an idea rushing around in my head that maybe I need to be on here at 9 before the market opens, but we'll see. I'm actually thinking about that as well. All right, and Mike, you're right. The IRS has received more returns filed so far this year than any other year. That's true, and you know, there's my opinion on a couple of those too, but I'll save that for another discussion. All right, let's move forward. UUP Cash. We said Cash was going to catch a bid last week, and it certainly did, as you can see here. Now, bottom end is 24.20. This is UUP. This is the Power Shares Double US Dollar Index, is what I'm looking at. But take a look here. You got 24.2, and now at the top here, we're getting very close to 25. Look at where that all happened, 24.2, and this is about 24.9. This is all in the span of less than 2 weeks from the low to the high. All right, so the U.S. dollar has caught a buy. Why is that? I'll tell you why. Because it's not about the dollar buyers aren't buying because they believe that the dollar is going to continue to get diluted. They're buying because of what they see as an impending rate change. And if the impending rate change comes along, that means if interest is being paid on the U.S. dollar, then that makes the U.S. dollar stronger. All right? There you go. So this is, again, kind of a measurement where if we see a breakout. Now, I want you to look at this area here. All right? We've got a long-term downtrend in the U.S. dollar. We've got a short, more of an intermediate-term trend sideways, which has been happening since December. And the short-term trend, which has been happening since January, is actually slightly higher. So if you look at the U.S. dollar, it is higher on the year. Now, the area I'm most concerned with is right here above 25. We get above and close above 25, then we are breaking long-term downtrend resistance. We are breaking intermediate-term resistance, and we are coming close to short-term uptrend resistance. This is all playing into a potentially higher dollar. All right? USO, the hot commodity. This is the hot commodity for not only 2021, but also late 2020. This all started back in the the fourth quarter of 2020, where USO, which is what we're looking at right now, this is the ETF for United States oil, was trading in the mid-20s, 25. We hit 44 on Friday. In fact, over the weekend, there was an attack on one of the biggest Saudi Arabian oil fields, and the oil market was up even more before pulling back a bit. So we saw that gap happen, and now we're getting a little bit of a pullback. All right, remember, buy the rumor, sell the news. And so could this be the area where we pull back? Well, if you look at the short and long-term charts, they're definitely in an uptrend, and we are now in an area where we're bouncing off the equilibrium area of an uptrend, which is in the high 43s, as you can see that bounce. All right, if we go through that, then I'm looking at an area down here around 42, 41 to 42. As you can see, that's where the channel support lines are coming. Now, I also see two supports happening where we've got support coming up on the short term, and we've got again, the median range, or mean range, excuse me, right there around the $42 level. Now, I have now for the last, 3 weeks, I've been saying on this channel, amongst other webinars and other areas I do, Fast Fortune Club is one of them, we've been discussing a bullish seasonal trend in oil and USO. In fact, we had some trades on USO and in the oil markets where we've gotten out of a lot of them because they've hit our profit targets. This is a 5-month pattern, folks. We're out in 3 weeks. We're already hitting profit targets in 3 weeks. Well, that's what happens when you go from an area of the high 30s to the mid 40s that quick. We were looking for a 15% move in oil over 5 months. All right. Well, when you go from the high 30s to the mid 40s, you've already hit 15% and then some. And that's what we've seen happen in USO. I do think USO is a bit toppy, but we are still in that trending area for USO. Let's move forward. Gold. All right, here's the disappointing commodity of them all. One I happen to own long term. All right, so I've been buying on the way down, and I've been buying on the way down. And we are now in an area where we're about to hit. Look down here, folks. This is 157. 157 is very significant to me because we've got long-term, intermediate trending down and short-term trending down. And look what's happening right down here. Right down here where my big green arrow is. Where the big green arrow is where intermediate and short-term channels are coming together and showing us where the next potential bounce could be, right around 157. All right? So it'll be very interesting to see if there's going to be some short covering in gold, and he's going to pop this thing up. All right. Now I got to tell you, I'm on the losing end of GLD right now. I'm thousands of shares of GLD, but I've been averaging in, and it's a long term for me. It's not a short term. All right. So there you go. And so if GLD does catch the bounce here, where do we potentially go? There are two areas that I like based on these charts here. The first one I'm going to show you is 164. If you look at 162, my bad. Take a look at 162. That's the median area, all right? That mean reversion area of the short-term downtrend chart. Take a look at this one. I like this one even better. This is around 167, so 10 points higher than where we are right now. That is the mean reversion area of the long-term chart and the resistance level of the shorter term chart, right in that spot, right in that sweet spot. All right, so there you go. That's my take on GLD. All right. So let's go ahead and look at, as we move on. I guess, I do this every week, and I look at FANG, and the only reason I really look at FANG is because I'm not a big fan of FANG. I come and go in FANG. I think Amazon has treated me very well for the most part, when I trade into these areas. But I do it because they're the most popular stocks out there. So let's take a look at them each really quickly. So take a look at Facebook here. Facebook, we've got you've got that short or long-term downtrend on Facebook with the highs that occurred back here, and this is going back into October. Facebook hasn't seen a high since October, a higher high for that, because since then we've been seeing lower highs, lower highs, lower highs, lower highs, just continuing to move. What's interesting to me though is that we've now created short-term and intermediate-term pauses. Take a look at the trends. So we got the long-term downtrend, but short and intermediate term are sideways. And we've now created this range that's around the 245 level up to around 285. And that's what we're getting is about a 40-point range on Facebook. The other thing I find interesting is that the lows are getting higher and the highs are getting lower. This is going to break one way or another, folks. All right? One way or another. This thing's gonna pop one way or another. And if you want my opinion, and that's all it is. Again, it's not an investment advisor opinion. It's just my opinion based on the channels. Is that a break below 255, and we're heading into new lows for the year. A break above 275, and I think we could retest the highs of last year. But if you take a look at the Great Rotation. The Great Rotation is rotating out of new tech, and Facebook is in that category. And what's happening is we're rotating into other areas, and those other areas are the old school stocks. all right? Dirty energy, banks. And if you want to go into technology, IBM. I know that's a company a lot of the folks that are millennials and on the way down are not used to even looking at. But IBM has had a significantly good year. All right, let's take a look and see what Apple's doing. Apple has not had a significantly good year. Its highs were back a little more than a month ago. You got to go back to the end of January to see their highs. Since then, we've gone from 145 down to we are hitting new lows for the year as we've traded below 120 and are in around the 117 area. Now, from here, where do we go? Okay, the good news, if you're looking at Apple, there were a lot of people that were going apple picking last week, and it looks like maybe they picked some rotten apples because apple picking last week took the stock from the mid 120s. Now we're trading down around 117. We're getting close to the mid teens, but we're also getting close to long-term support. We're on long-term support right now. We're on intermediate-term support. We have a move to the downside here that suggests we're going down to around 115. But this is very interesting. You know what, guys? And I got to tell you this too. I'm looking at some of this stuff for the first time today, like you are, as you're looking at it with me. I didn't do a whole lot of prep work. All right, I get an idea of a foundation of what I want to cover here over this hour. But a lot of the stuff I look at, I'm looking at it for the first time like you are. So I'm writing something down here right now, and that is AAPL. What I'm looking at is I want to decide whether I want to get into Apple. All right, I want to look and see if I want to get into Apple and if it makes sense to me because the stock has gotten hit. And now we're talking about this stock trading at last year's. We're getting down to around, getting close to last year's lows. Not lows, but the end of the year lows. All right, so that's Apple. Let's move on. Amazon. Here's another one. Talk about a 20% off sale. 20% off sale doesn't just go at retail outlets. It's happening with Amazon as the stock was trading at $34.50. And now we're trading down around, we bounced off 2,900 on Friday. And we did get a bounce this morning, but we're pulling back. And so, maybe not 20% off, but 15% off for sure. 15% off the highs that we saw at the beginning of February. Again, Amazon. And when I look at these charts, guys, I'm going to have to bring up another Tom's Option Tools piece. This is one that I didn't have in here. Let me log in real quick. Let's slide over because I don't want to miss anything. I still got a lot to cover with you guys over the next half hour or so. I want to go back into stocks and charts again. And what I'm going to do is I'm actually going to bring up the overlay. And I want to look at implied volatility. There's GameStop. We're going to get into GameStop in a moment. I want to get into Amazon first. AMZN. Amazon is actually looking like an interesting value when you go back and you see what it was trading for back before the election. And now we're pulling back again. And I mean, that earnings is a clear indication of buy the rumor and sell the news. Because didn't Amazon double their earnings per share? I believe that the estimate was somewhere around $7 a share, and they came in at 14, and the stock dropped off since then. Somewhere this one's going to find value, all right? And so, that's what I'm looking at. But more importantly, now, the one thing that hasn't gone up yet, which is making me decide maybe I should wait, the one thing that hasn't gone up is the option premiums. I like option premiums when they're up here, all right? This is the option premium area, what I like to call at the money IV, all right? This is expressed as a percentage. It's trading around 35 right now, all right? If it's up here around 50, what that means is that options premiums are that much more higher. You're selling them at a much higher value, and I love selling premium on stock options of stocks that I potentially would want to own. So it's called cash secure put selling. But right now, they were down in 25. I'd like to see this get to an area of around 45 before I want to really start selling some of this stuff. All right, let's move on. Let's go back to the original charts. Let's take a look at Netflix. And here's Netflix, and Netflix is in a longer term up pattern, but it has a short term, an intermediate term sideways pattern, a short term downtrend. But I want you to look at this area right down here. This is right around 490 to 495. See where the red line, the green line, and the blue line all come together? That's called channel collision support. Channel collision support is, to me, very interesting and a very interesting area that could show us buying opportunities. All right, so that's Netflix. Let's move on to Google. Google is, and I talked about this last week, it's the only stock that seems to be moving with the stock market, with the S&P 500. And it's a NASDAQ stock, but it's definitely getting very close to those all-time highs once again. All right, so Google has up, short, up, and intermediate. They're all long, intermediate, short, uptrend channels moving higher. Next areas of, we're caught in a little bit of uptrend resistance right now. Today's high definitely mentioned that. But we get above the highs that happened about 3 weeks ago, and Google could see 22 to 2300 on the horizon just simply because of what the channels are suggesting. All right, so that's my long-term take on what's going on with stocks, bonds, currencies, commodities. You know, is there anything else I want to see on here? And there is, and I want to get back to them. I do want to get to them. Tesla, we're going to get to in a moment, but take a look at Tesla. Tesla, I want to talk about. Let's just start with the chart of Tesla. Take a look at what's going on with Tesla today. So Tesla was a $400 stock before Thanksgiving, and a lot of Tesla owners gave thanks after Tesla went from 400 to 900 in the span of just a few months. Fast forward to February, and February saw that $850, $900 Tesla drop down to now below 600. Again, where does Tesla go from here? It's anybody's guess, but I want you to pay attention to the channels. Long-term trend is up. Intermediate term trend is sideways. Short-term trend is down. But they're all colliding right now where the price of Tesla currently is, which is around $580. $580 is the area where we see right now channel support happening. Okay, it's a windy day here in Florida. I'm in my podcasting studio, and it's padded in here pretty good. And yet I can still hear the wind whipping around outside as we're catching the tail end of something. Okay, so Tesla Motors, and that leads me into the reason I bring Tesla up is that, believe it or not, folks, Tesla is a shaggy stock. All right? Tesla's a shaggy stock. Now, what's a shaggy stock? How many of you have heard of shaggy stocks? I'm asking the question right now as I'm going through the some of your questions, comments, etc. And I want to thank you guys for all the great comments you have, especially on I see the tools. For those who use the tools, thank you very much. I appreciate that. Microcurrency trader, yeah, it's been that has been one of the crypto markets, and we've got a really great research team here that I can't take all the credit for what we've done, and especially in cryptocurrency. I can take 100% of the credit for what I've done in cryptocurrency as far as what's happening in my account. I'll take 100% credit for that because I pulled the trigger. But I can't take 100% credit for the research that goes into our cryptocurrency and microcurrency publications because I've got a great team. But we've had a stellar year. In fact, you go back when we started microcurrency back in 2019, it's been unbelievable. And we haven't just been buying and holding, we've been buying and selling. And you know what I'm going to do for all of you that are here right now? I'm going to show you what's on my watch list right now for cryptocurrency. I will show you that before we end the hour. All right, I promise that to you. But my question to you goes back to how many of you know what are not shaggy stocks, swaggy stocks? Because any of you that know, and they're not like Scooby snacks, shaggy stocks. No, now I'm saying it wrong. Thank you. Swaggy stocks. Swaggy stocks was I was talking on the podcast last week, Chris, and I said, the Reddit community. I wish there was a way we could take all of the Reddit comments by stock, take all that data in and see how many comments were being made about what stocks and how many were bullish and how many were bearish, because we could create a sentiment indicator off of that. Well, somebody already did. And I want to share that with you right now. And it's based on Swaggy Stocks. And Swaggy Stocks, if you look at my screen, you can see that if you go to www.swaggystocks.com, you're going to get what's on the screen right now. You're going to get to Swaggy Stocks. We're going to go there right now. And the reason we want to go there is because we want to see where all the retail traders, where all the inexperience is going. All right? And so to do that, let's go over to Swaggy Stocks. I've already set it up, and I'm looking at it right now. Swaggystocks.com. And what we want to do is we want to go down to most mentioned equities. If we go to most mentioned equities, here's where they are today. Take a look what's on top, folks. GameStop, GME, up there on top. And when you move your mouse over to GameStop, you're going to see that 35%, you're going to see 35%, 976, and 211 is what you see there. And these are actually expressed, in quite a bit more. So if you take a look at, for instance, the comments that you're seeing out there on Swaggy, and you know what? I probably need to reset this. Let me reset this just to make sure I'm looking at the right numbers. Yes. So GME down at the bottom, and you're going to see that 35% of the chatter that's happening on Reddit right now is all around GME. Most of that chatter is bullish. Some of that chatter is bearish. So this is very interesting to look at, all right? And I think it creates some very interesting opportunities for us as we look at this. So I see GameStop, and then I go and I look at GameStop, all right? So let's go back and let's take a look at GameStop. And so I'm going to move this over here. Let's see what I got over here. Okay, that's, yeah, you know what? That might make some sense to look at and look at it right here. So let's look at GME. Here comes GME, and you know what I want to do? I just want to look at let's take a look at the last 60 days, because what's happened beyond that really isn't a big concern of mine. But if you see, GameStop has made a new high for the last 30 days. You go back into the end of January, and you see what happened, where it just got completely just out of control and back down. But we're making new highs, and we go look at Swaggy, and there's a lot of folks that are going in and saying, this is bullish. To the moon, they say. All right? I don't know them all, guys. I don't hang out and watch a lot of the Reddit community. I just want to take the data, all right? I'm a quant guy. I want to take the data. I want to quantify it. I want to look at it, extract, and look at the overall data. And in this case, we're looking at sentiment. All right, so that's GME. So when I look at GME and I go to the stock chart on GME, I'm interested in a couple of things. Number one, where's the price? Number two, where is the volatility of GME? Because from there, I want to see an option chain on GME. And so let's go take a look at GME and look at the option chains on GME. And you know what? Let's take a look at the expiration of next week. And the reason why I want to look at next Friday is the third Friday of the month. That's where, if you're going to find any volume, if you're going to find any kind of efficiency between the bid and the offer, it's going to be on the third Friday options. So scroll down. Let's take a look at what we got here in GME. Calls. These are the calls. Over here are the puts. I've blown this up so we can just look at calls. And as you can see, the stock's trading at $180. And so the 180 calls are the call options right now that everybody, well, not everybody. These are the call options that are the at-the-money options. Now, the first thing I see that causes concern for me is if you look right next to my head, let me move this over a little bit so you can see it. So 43.20 by 47.05, that's the bid and the offer. That's almost 4 points difference between the bid and the offer. Not very efficient. You got to go out of the money to get some kind of efficiency. But even the 195s, we're talking about better than 3 points between the bid and the offer. So maybe you need to go way out of the money. Let's take a look and see what, and I'm going to type 999 in here, and that's just going to give me every strike that's currently being shown for GameStop that ends on March 19th. Let's go all the way down to the bottom. My goodness, the 800 calls. Are you kidding me? 550 by 565. 800 calls. You're getting $5.50 by 565. Now, that's a pretty high probability trade. There's almost a 90% chance. And I know this based on a figure here that I can see. There's almost a 90% chance that this option will expire worthless in 4 days. No, sorry, 9 days. 11 when you count the weekend. But that's what we see there. So I'm a little more nervous about selling call options. And most people that I know you can't do it anyway because if you're selling open call options, it's not gonna be cheap. A call spread, Dan, would make sense. You are correct here, sir. But what about puts? So I gotta go look at the puts. So I'm gonna scroll down. Wow, is that right? There is a $1 put? $1 puts trading for a penny. You can't get anything for them. You get up here, though, however, let's go to, say, if the stock's at 180, how about the $90 puts? That's half the distance to where we are right now. The 90 puts are selling at 465 by 490. Now, guess what's interesting about the 90 puts? They have a 92.5%, that's a statistical probability. 92.5% statistical probability that these puts are going to expire worthless next Friday. About $465 per put option. Now, on the 2.5% chance that they do expire in the money, that means the GameStop's going to have to come down below 90 and be below 90 by next week. If that does happen, then you are going to get put the stock. Now, I myself, looking at two things. Number one, patterns. And number two, the fact that that stimulus check. Help me out here, guys. All right? Need a little help from the audience here. Those of you that are watching me. Very quickly. Stimulus check gets passed. When will you see it in your account? When will the American public see the stimulus check in their account? And then the second question is, how fast can you get it from your account, from your bank account, over to your brokerage account to buy more GameStop? Because I can tell you that's what a lot of people are looking to do. A lot of people are looking to take that stimulus check, or a good chunk of it, and buy call options and buy stock on GameStop. But they can't do it until they get the money in their account. James says by the end of the month. I think they could have it even quicker. All right, 2 weeks. Kathy's saying 2 weeks. So, if we're going to trade, stay with me here, everyone. If we're going to trade against the herd, because that's what this business is about. This business is about, trying to be smarter than the average bull. Okay? Not the average bear. That's Yogi Bear's job, to be smarter than the average bear. But it's our job to be smarter than the average bull and bear. And if it means that we have to look at what the herd is doing, Well, what's the herd doing right now? The herd is looking to get into this market and double down on GameStop and AMC. And right now, these stocks are going higher in anticipation of that. So, if I had a choice to sell calls that were at the $800 mark or sell these puts that are at $80 or the $90 mark, I like the puts. And the reason I like the puts is because I like them because I believe that there is a coordinated effort that this market's going higher before stimulus money gets into bank accounts and then into Robinhood or wherever else the new crowd is. After that money gets deployed and gets spent, then I like the opposite side of this type of trade. What do you think? Give me your comments, guys. What do you think about that strategy? It's a sentiment-based strategy, you might say. But Tom, I don't understand the pattern. The pattern's very clear. We've already seen it happen. And lightning does strike twice when the government's involved. All right. Let's move on. While I see your comments coming in, let me move on to what I want to cover with you guys. And I want to talk about cryptocurrency. I want to talk about cryptocurrency for just a few minutes. All right. And by the way, with the strategy, those of you that think about this, think about it for yourself. But those of you that are thinking about the strategy, think about this for a moment. There are options. What if I'm wrong? Credit spreads. What if I'm wrong? Limited risk trades. They're there. You can do one-to-ones if you want to. You can do one-to-ones. All you have to do is create a credit spread that's right around the strike price, right around the actual stock price. Buy a call, sell a call. Buy a put, sell a put. You can create one-to-ones there based on your idea for direction. And you make one or you lose one. So those are some ideas, folks. All right, cryptocurrency. I want to talk about cryptocurrency for a couple reasons. And as we kind of get to the end of our session here, and I will go through and look at your comments. And again, guys, I wish I could look at them all, but I can't. There's just no way I can. But I'm going to look at as many of them as I can. I'll comment on them in just a few minutes. But when it comes to cryptocurrency, Bitcoin. All right. So I threw some comments up here because I wanted to make sure I had a chance to talk about these. So Bitcoin continues to have strength as we move back above the $500 mark. That's something we definitely know. Okay. The other thing I want to mention is that that we saw Bitcoin move, and I want you to take a look at some dates on the chart. All right. The first date that I want you to see on the chart is really the beginning of February, because the beginning of February we were trading in the low 30s on Bitcoin, and then by the time we got just a few weeks later. Now remember, cryptocurrency charts include weekends and holidays. That's why when you see this chart, it's spread out a lot more. All right, so you see the darknet buy signal that we had on Bitcoin that moved from the B there, you see, to the S. That was the bullish signal. That was the sell signal. This took us from 30 up to above 50,000 before the sell came in. Well, guess what? Just a few days ago, we got another buy signal. And it looks like that signal has definitely confirmed. And the Bitcoin could be making new all-time highs very soon. These signals tend to happen and last about 30 days on average. So I like this. My Bitcoin account likes this very much. But I'm bringing this up because I wanted to show you a couple of dates on the chart here. Think about the beginning of February, all right, end of January. And then end of January to end of February, and then where we are now. Now, I tell you that because I want to show you the next chart. All right. There you go. The next chart is Riot Blockchain. Now, Riot Blockchain, again, beginning of February, it was at 20. End of February, it was at 77. And then dropped down, and here we are today. So at the beginning of February, we went from, let's call it 20, to 77, That was a triple. That was more than a triple in the stock price. Back to Bitcoin. Beginning of February, 32. End of February, 50. Well, the high was 58. It wasn't even a double. It was not even a double. So 40% gain. 40% gain, 200% gain to this point. Now, back to Bitcoin again. Bitcoin's high was 58,000. Where are we now? 51,000. So that is, now we did drop quite a bit. We dropped into the low 40s from 58 down to the low 40s. We were down over 20% in Bitcoin, but we've rallied. Now we're down about 10, we're down a little more than 10% from the all-time high. Let's take a look at Riot. Riot 77.90, Riot today $40. So Riot is still down 40 to 45% from its all-time high. All right? So we had a factor of 5 on the way up. Riot had a 5x move from during the month of February up. Riot has had a move where it has cut its value almost in half. And I'm talking about today versus Bitcoin having a move that's now 10% below its all-time high. We've had a 5x down. The question that I'm posing to the group here is, when does Riot blockchain start moving with Bitcoin again? I think somewhere between $30 to $40, and we're at the 40 mark right now. We did hit this morning, $34.25. So did we get enough shakeout of Riot blockchain to where it's now going to move with Bitcoin once again? I think we're close. All right, so those of you who are commenting on Bitcoin and commenting on Riot blockchain, and you're saying, you're throwing some stuff out there. What about ETH? I have a lot of ETH too, and also, did you see the news that came out that that now they're burning off ETH? They're going to be burning off some ETH that they use every time Ether is used as what's called gas. All right. Gas is what you call it gas when you transfer cryptocurrency to cryptocurrency, or U.S. dollars to cryptocurrency, or cryptocurrency back to U.S. dollars. If it gets transferred in gas, which is an ETH, that gas is getting burned off. That means that ETH will be no more. And what happens when you remove supply from anything? Price arbitrarily goes up. All right? That's a side note. I saw that coming in. That's why I had to comment on it. All right? But, I see BTC heading higher. But a big question from a lot of folks was, can I trade Riot blockchain? I've seen this in the past. Can I trade Riot blockchain? And last week I said Riot blockchain is going to move down a lot more than Bitcoin is going to. And even if Bitcoin goes sideways, we could see Riot move into a sideways pattern. And we saw that happening too. All right. And so looks like my video just went a little bit dead there, guys. So let me do this. I'm going to change my video capture. So hang with me for a second. I should have had a secondary capture on there. There I am from the other side. There we go, guys. Anyway, again, I'm looking at now Riot, which is looking more and more like it's likely going to move with Bitcoin, because a lot of the volatility, that statistical movement, that statistical volatility, looks like a lot of it's come out finally. All right. So I see here, why is it so costly to buy and sell crypto on Coinbase? Well, Coinbase, like a lot of other companies, do charge a 1.5% commission to move this back and forth. So if you want your commissions to be lower, if you're trading, Andrew, and any of you, those of you that are here, if you're trading crypto back and forth, take a look at Coinbase Pro. All right, that's pro.coinbase.com, because their fees are going to be less than 1/3 of the fees that you see on just Coinbase.com. I use Coinbase.com not as a trading vehicle, but as an investment vehicle. I use pro.coinbase.com as a trading vehicle. All right? And so, you know, when we, and as before I even finish up, guys, I've got to talk a little bit about, you know, the final stuff. I kind of overlooked this. There's two things I wanted to go into with all of you before we get too far down the rabbit hole to the exit door, and that is GME. How about AMC? And remember, these are all companies that are not that fundamentally sound. In fact, if I were AMC, if I were GME right now, I'd be looking to do a new offering to bring money into the company that would help them, give them sustainability. I don't know why these guys haven't done this yet. I imagine that's one of the reasons why the CFO is now gone from one of those two companies. But take a look at AMC. It's on the rise again too, back to $9.27. Again, these are companies which are going to get the offer's going to get hit until the money comes in until the money comes in for the next round of stimulus. Then it's going to be, all the bears are going to come out again and take the bulls for another ride. That's the pattern that I see. But this is AMC. We looked at Riot. How about PTLN? It's PTLN or PTON? Peloton. And if it's coming up on my screen, they have options. Look at Peloton. Talk about a group that has rotated. All right, if you take a look at Swaggy's got Peloton's number 3. 9% of the chatter on Reddit is around. Oh no! I'm looking at the wrong one, guys. My bad. Peloton is way on down the curve there. It's this is Swaggy's looking at PLTR. So let's do ourselves a big favor and look at PLTR. I will say Peloton itself, definitely not days of old when it was at 170 and it's come back now down around 110. But PLTR, excuse me. Let's try that one more time. PLTR, there we go. Palantir Technologies, that's down near its lows. This was a big Reddit community stock when this thing jumped from 26 up to 44, and it's now gravitated back down. It too, this one is not following the Reddit community like GameStop, like AMC, but it's also because you take a look at it. GameStop's the one, that's the big one that everyone's looking at right now. AMC is number 5 on the list. But take a look at these ones. When you look at Tesla, look at the 237 positive comments, 197 negative. So that's not one that's tilted very high to one side or another. GameStop tilted high to the bulls, which means the sentiment is very bullish. All right, if you want to look at another one, AMC tilted very high to the bullish side. Another one is tilted real high? NEO. NEO's tilted very high. Let's take a look at NEO real quick and see what it's looking like here. So let's go ahead and type in NIO. Now, NEO, even though it's tilted high, stock seems to be continuing to move lower. It is higher than the open today, but still significantly lower than it was just a few months ago. All right, I did not want to finish up today without talking about that, but I will finish up talking about this. A lot of you I see are talking a lot about cryptos, and you're asking me, what do you think about this crypto? What do you think about that crypto? What do you see happening in different crypto coins? Listen, guys, I'll tell you this. I'm a U.S. crypto trader. If it's not on Coinbase, I don't trade it. Because to be on Coinbase, you got to pass some minimum aesthetics as a company. And then from there, what I do is I start looking at something I call currency waves, and I also start looking I look at darknet. Darknet has been a fantastic signal for us. And if you take a look, for instance, at crypto charts, this is the darknet chart for Bitcoin. Notice the last darknet signal we had from 32 to 50. Look at the darknet, or the low 50s. Now we're back at around, it started to give us darknet signals in the high 40s, and here we are in the low 50s again. All right. But I'm going to show those of you that are here on my live group, and those of you that catch the recording, you're going to get it too. I'm not going to edit it out. Let's take a look and see what else is popping up on darknet right now. These are the top 5. Now, these are darknet signals, but it doesn't mean, when I look at these, it doesn't mean that they trade in, Coinbase. But I see Bitcoin on here. Bitcoin's on here. Cyber Miles is number 2. These are all darknet signals within the past week. GoChain, number 3. Maker, number 4. And Poet is number 5. What do these all have in common? They have all had some sort of a darknet signal. So when I go to Go, and I come down, I look at GoChain, there's a buy signal on GoChain that just occurred in the last 7 days. We saw BTC. If I go look at CMT Cyber Miles, darknet signal happening right now. What is darknet? That's a question I get all the time. That is where we look at long, intermediate, and short-term, not currency waves, channels. When we were looking at channeling stocks, this takes a look at those channels and finds those channels and creates trades, or creates darknet signals from those channels. All right? I gotta look at Poet. It's such a cheap, this is, So every once in a while, and there's no software on the planet that doesn't get around this, every once in a while you'll see something that pops up and you go, why is that here? And this is just one I'm going to overlook. I'm not even going to look at that one. In fact, I'm probably going to take it out of the symbols that I am looking at, because it's just something that's just too cheap and doesn't move. But those top 4, well, those top 4 might be something worth a little bit more of a look for me as a crypto trader. All right. Do I stake or loan in my wallet? No, I do not. But great question. Thank you for asking. All right. And so, guys, I hope that helps you. Especially take a look at that crypto at pro.coinbase.com. If you're a Coinbase trader, you should definitely be looking at it. If you're looking at actually trading cryptos, buying them and selling them. I'll tell you something else about Coinbase that you're going to like. It has limit orders in it. It has stop orders in it. It has more advanced orders that you and I, as crypto traders, can take, where the Coinbase website really is designed for you to buy, move, sell, receive, and send Bitcoin and other cryptocurrencies. All right? And there are, Mal, you said it, there are plenty of other coins on Coinbase Pro, not just BTC. There are several of them out there. And of course, there are the brokerage firms that offer some cryptocurrency using their own algorithms for creating buy and sell points. All right? Robinhood is one of them. So, there you go, guys. That's it for me. Have a great rest of your day. Recording will be out sometime, I would say probably within the next hour or so. So thanks again, guys, for hanging out with me. I apologize if I didn't get to all of your comments, but we will see you again, same time, same channel next week, and we will do it all over again. Thanks, everybody. Have a great afternoon. See ya.